Let's take a look at the dollar. It is down more than 8% for the year to date, just over 8.5%. It's trading near three-year lows. Fears about U.S. imposed tariffs and a possible decline in U.S. exceptionalism are part of the story here. Our next guest sees more trouble ahead. Joining us right now is Marc Chandler. He is Bannockburn Capital Markets chief market strategist. Marc, we know that there are some troubles here. We know that there are some issues, but we've also seen the dollar been on an incredible gain over decades at this point. Is it really all that unusual to see a pullback right now? And what are the troubles that you see ahead?
Yeah, no, I think you're right. I think that oftentimes the markets confuse cyclical portfolio adjustments to these big structural shifts. And a big structural shift could be taking place, but I don't quite see it in the data yet. Through March, foreigners bought more U.S. assets in Q1 this year than they did in Q1 of last year. But I do think that the dollar's big cycle is over. The dollar index itself peaked a couple of years ago. And so I think that this is just a gradual process, a little bit faster, sometimes a bit slower. I'm looking for another 5% decline in the dollar and the dollar index this year, predicated on not just the tariffs and the whole taco story, but really the easing of monetary policy later this year, when most of the other central banks, like the ECB, which will cut rates later this week, are going to be done or nearly done with their cuts as the Federal Reserve just resumes their cuts late this year.
So this is a Fed easing story, which, by the way, the equity markets are kind of hoping for. What's your long-term prognosis for what happens? Another 5% this year would be significant, adding up to the losses we've already seen this year. But what's your, let's say, 5-year prognosis for where things head with the dollar?
Well, yeah, I don't even know what I'm eating for dinner tonight. So 5 years. So, I mean, it's true that what I really like about the foreign exchange market is that the trends last for a long time. Like you mentioned, the dollar index was in a long-term uptrend from around the time of the end of the great financial crisis through 2022. So I think this is a big decline in the dollar, the super cycle. We've had 3 or 4 of them since the end of Bretton Woods. And I think that this one has ended, and we've got a ways to go still. And I think that to me, it's not so much about the decline of American exceptionalism and all that, but I do think that the U.S. role in the world economy is changing. And I think this is a profound development, but it's going to take a while for it to really sort itself out what it really means. But in the near term, I think that the cyclical forces, and remember what happened last year, Europeans bought a record amount of U.S. equities. So there's a little bit of buyer's remorse. And many Americans ourselves, we've been so overweight U.S. assets because we performed so well. And I think that many Americans like myself have begun diversifying. Give you an example. We all know that the DAX is up about 18% or so this year. But in dollar terms, for dollar-based investors, many of the European equity markets are up 30% for U.S. dollar-based investors. And I think this is the attractive thing, that we need to diversify Americans with our 401ks, mostly invested in U.S. equities and U.S. assets, with our income tied to the U.S. We need to diversify our assets, our portfolios, and foreign equity markets on the back of a weaker dollar look attractive.
I mean, that's a really interesting point, just the weakness in the dollar and what that means to American portfolios for some of this. Do you think the dollar will still be the reserve currency a decade from now?
Yeah, I mean, I think we make a big deal about the reserve currency status of the dollar. And I think that the key there is not so much it's transactional, like being these different payment systems, but I think that as a savings vehicle, and I think this is what's scary about the budget deficit that you and Joe were talking about. I think that the U.S. we're losing people's confidence, and that could change, of course, with the political winds. So, yeah, I mean, I think that the reason the dollar is going to remain the reserve asset is because there's no clear rival. Behind the dollar's reserve currency status is the U.S. Treasury bond market. European bond market is still not a uniform entity. There's a lot of more like the U.S. muni market, and I don't think China is ready to take this stage yet. I think that a lot of the debt, a lot of the bonds in China are really in the provincial and like local governments, not so much in the federal government. So they don't have a bond market that'll compete with the U.S. Treasury market, and that to me is the key.
So what are you telling people to do aside from diversify into foreign equities?
Well, it's funny. Many of our clients are hedgers. They're corporations who have revenue or expenditures outside the U.S. And so for them, the question of hedging the dollar exposure that they have. So, I mean, it's one thing to talk about the best trade ideas as if there's a uniform market wanting to know what the best trade idea is. But a lot of market segments are not speculative. And most of our clients are hedgers. And this volatility in the market makes things more difficult for them. Not only the volatility in the markets, but the uncertainty of policy coming from Washington.